Hey, Michael Mapier. So, yeah, the dollar is falling. Well, just do a market recap. The dollar is falling off a cliff. We'll look at the charts and the futures and stuff like that. But the market is rallying, and the market is banking that the Fed is basically done because of the inflation data. Hang on a second. Let me make sure something's clean here. Clean the screen. Put a lot of moisturizer. That the inflation data has gotten lighter, softer, it's come down, and that they can either pause or maybe even cut interest rates. And the market is like forward looking. It's thinking, oh, everything is all nice and dandy. Even though a lot of the economic data has been mixed, except employment has been a mixed bag. The last jobs report was pretty good, but a lot of the jobs were government. The dollar cracked 100 today, and I still continue to think that you need to be in commodities, you need to be in oil, energy, you need to be in precious metals, you can be in miners, which are a little bit more speculative, um, 3 to 5% in the cryptos because they are an asset class, and definitely need to be in international exposure. Uh, I don't know much about international companies. I think you should let the pros handle that, or just you can go with ETF EEM. I'm doing it in my 401k, the FKIDX for those that know me already, and I started putting a little bit into the FSCRX, which is another Fidelity small cap fund, very little because I got a big allocation into the foreign markets already. Um, but I think the market is reading it wrong. I mean, the dollar is cratering, and when our dollars are declining in value, that means we buy less, and that's inflationary. Things are going to cost more for us. So I think inflation is going to roar. It's going to show its ugly head. Even though these remember when inflation um, started, the Fed was saying it's transitory, it's transitory, it's transitory. Well, that was in 20, saying it was transitory, transitory. It's 2023. It's 3 years later, and they've raised rates to 5.25, more or less, and their mandate is 2%. So we're still far away. I think I would have to look at the latest report to give you an exact number of what the inflation rate is at, but it's a lot higher than 2%, and we all know that because we go to the stores. So with the falling dollar, it's only gonna make it worse. And remember, oil is priced in dollars, so oil is. We'll look at the futures, but it's already climbing. I think it was at 76 last I saw it, and 80 is right around the corner. Gold is perking up again. Um, all my investments are doing great, except me being a contrarian to all these tech stocks, Nvidia, uh, probably Nvidia, Spy, and the Qs are my biggest drags right now that I have. But with my experience and what I've seen is that markets rise, like if you're taking the stairs, but when they drop fast, like an elevator. And um, there's always a crisis. It's either a banking crisis, or it's a virus, or it's a war. So some kind of crisis will come about, and it will scare the market. Um, Maybe the next crisis is a debt crisis, debt problem crisis, and the 10-year today dropped to 3.7 something. We'll take a look at the futures. Um, so somebody was in there buying the debt, which is the Fed. When you buy bonds, rates go down. When you sell bonds, rates go up. So when the world catches on, which they already are, because the BRICS are talking, the BRIC nations, Brazil, Russia, China, India, they're talking about transacting in their own currency that might be backed by gold. And the world is catching on that we are a 70% consumer nation. We don't produce much. We produce a lot of dollars, which we throw around the world. And also the problem that that the world is seeing with the dollar is that, for example, uh, what Russia did is and is doing in Ukraine, the United States sanctioned Russia, hurting their economy because they were transacting in dollars, and the world is seeing that hey, the United States can sanction us and hurt us with their currency, and so they're trying to get away from that risk, and also from the inflation risk. So when the world starts dumping bonds, selling them, that's going to make interest rates explode. And right now, the government is running deficits, and it's not getting any better. We have the student loan uh, crisis, over $1 trillion. They have to start paying back now in October, I think it is. That's another hamper on the economy, which is about an average of $300 to $400 uh, payment. And I don't even. They did a survey, and like 30% of the people said they're not even gonna pay it. Uh, and I don't think people care, because at the end of the day, you know, people have to live. You can't pay. You can't pay it. Um, and then we have credit card debt just soaring. There was a chart there on Zero Hedge. They were talking about non-discretionary. They were talking about loans and how they fell off a cliff. Um, and it's hard to get a loan for a house now at 7.5% or 8% or whatever that. It's just crazy. So the futures. Let's take a look at the futures. The 10-year is at 376, and let's take a look at King Dollar. King Dollar is at 99.75. It's at the low. I mean, it's pretty much fallen off a cliff in the last. Uh, Let me see if I can pull up here intraday. Let's go to month, and let's just do 1 hour. So you can see that the high was actually. Let's just go to 4 hours. So the high was 105, or well, 104.69 30 days ago. And look at that, we just fallen off a cliff. And that's just bad for us. It makes everything more expensive. Bitcoin has perked up again. There was some news that XRP, I think, there was some news on XRP. I think the SEC, they notched a landmark win on the SEC case over XRP cryptocurrency, and it surges. I think it's up pretty big. XRP. Last I checked, I think it was up. Let's see here. I thought XRP was one of the bigger ones. Oh, I'm sorry, it's the fourth one. Up 72%. XRP. And Coinbase was up huge today, like $23. So I still advise sticking with the big dogs, the Bitcoin and Ether. Um, that's your best bet. Maybe through an ETF, the Beetle or ATHE. Most foreign currencies were up. We talked about Bitcoin 31.7. Oil, I said 76, I was wrong. Oil 77.21. That's inflationary, folks, and 80s around the corner. S&P big rally today, flat at the open here at 6 p.m. Gold up $2 to 1965. Hogs 102. So pork prices are going up, and meat prices, feeders and cattle have pretty much stayed pretty even keel. Small caps flat. Copper 395. So that's perking back up, another industrial metal. The Nasdaq at 15.7, Dow Jones 34.5. Natural gas can't get out of its way at 254. Palladium and platinum have perked up a little bit, pretty flat at the open. Silver over 25 bucks already. We were talking about silver at 22. I haven't had it added any to my physical. I'm pretty comfortable where I'm at. VXM 14 and a quarter. The VIX, the grains open at 8. I think I saw them a little bit higher today, which are commodities. We'll see how they open up. Oats pretty higher, but that's like a very slim traded product. And those are your futures. So we shall see what happens in the. I think the Fed meets in 2 weeks. Is the next Fed meeting. Let's see what kind of news we have here. Little change. We have bank earnings coming up. XRP we talked about. Meta's Threads engagement has dropped off. I downloaded the app and I haven't even used it. Car prices are dropping pretty much. They downgraded Carvana today. It hit 40 and they rolled over to like 38, I think, which is pretty insane. The Celsius CEO got arrested. One of my favorite economists is Peter Schiff, and there's a video that Peter Schiff did about 2 years ago calling this guy's business a scam. And Peter Schiff was right again, man. The guy got arrested, man. Peter Schiff is a good economist. His timing is off, but he says it how it is, man. It's a shame. That guy should be involved. He was I think he ran for senator or something up in the Northeast or something like that. But he should be in the government helping them with the economic policy of this country and sound monetary policy. It would make the economy more stable, in my opinion. He's an Austrian economics. Most theories that government use and we're seeing today is Keynesians, which is pretty much Keynesians economics is printing and low interest rates, and that's what we have. We have the central banks of the world. They pretty much control everything. Aspartame may cause cancer. We've talked about that. Most of these articles, you have to be a subscriber. We're going into earnings season. I know Delta reported good numbers. Even though airfare in the CPI report, the inflation report that came out, airfares were down, hotel rooms were down, rental rates were down. I know insurance for cars was up, but I know Progressive and Allstate got killed today. So Progressive missed their estimates big time on their earnings report. So that's one to watch. Let's see what else we got here. But I think, all this talk about higher interest rates and keeping interest rates higher to tame inflation is pretty much BS, because interest rates are falling right now. They have fallen from, it was at 410 a couple days ago. Now we're at 375. Pretty big move. And the dollar is really, really deteriorating quickly. So I think that's just adding fuel to the fire. Big Short, Eisman says earnings have not bottomed out for regional banks. SoFi, the administration needs to provide relief for student borrowers that need it. I got to look into SoFi, how they're involved into student loans. I don't know if they hold the paper, but if they'll hold the paper on those loans, even though they're guaranteed by the government, and they can garnish your wages, because I used to have student loans when I got out of school. Nothing crazy, and I got out of it pretty quick by hustling, and I got lucky and I paid it off. But I hear stories, and it's just ludicrous stories of kids that get out of school with huge debt. Don't get into big debt. Make sure you know what you want to study, and that's absolutely what you want to do for a living. Just don't Don't do maybe what your parents want to do or what you think is gonna make the most money. Do what makes you happy. At the end, that'll make your life easier when you wake up. Inflation cools. I don't know how they think inflation is gonna cool if the dollar is falling. I just don't get it. And I know that they have a meeting in 2 weeks, so we'll see what happens. Here's a chart on the inflation, supposedly. So motor vehicle repair was up 20%, frozen vegetables 17.6, motor vehicle insurance up 16, candy and chewing gum 13, pet food 12, leased cars and trucks 11, bread, sugar, carbonated drinks. Talking about carbonated drinks, I like sparkling water. So what I did was I have a good water filtration system in my house, water softener and all that. So I bought a Soda Stream, and I have the carbonation, and I make my own sparkling water. Rent up 8%. What was negative? Gasoline was 27. Health insurance down 24%. I don't know about that. You see, airfares was down. Gas service, car and truck rental, which I mentioned at the beginning of the vehicle. Major appliances, bacon, television, eggs, used cars and trucks, recreational books, those were all negative. I don't know where they get health insurance down 25%. Right now, I pay for my family. I get health insurance for my wife, me, and my daughter. I get dental. I get vision. I get legal aid. And I added a supplemental like life insurance extra, just in case, because I'm the breadwinner, just in case, God forbid, something happens to me. My wife is taken care of, and my daughter. And I pay about $1,000, 900 a month. I get deducted. So CPI is down to 3%. Let's see, what is this chart? All items 3%. Food and energy 4.8. So we were at over 8, and now we're at 3, and less food and energy 4.8. But we all know that food is through the roof. And with a weakening dollar, I think we'll see this perk back up. So that was an interesting chart. I'm glad I clicked on that. That's disgusting, that burger. Looks disgusting. Yeah, that's pretty much it. I don't want to drag on the video too much longer. I am taking a little bit pain in the tech space, unfortunately. But I've rolled for more credits, and I've given myself a little bit more time to be right. We'll see. Maybe I won't be right. I don't know. Maybe this is a new bull market. We haven't crossed the old highs. I think we need to cross the old highs and continue higher with volume to be in a new bull market. But I don't think we're in a new bull market. With inflation still where it's at, interest rates at, they say it's neutral. I think it's restrictive. I don't see a lot of people buying homes at 8%. Interest rate. I mean, I don't know anybody who's bought a home. I talked to a lot of people. Chime in if you know anybody. Chime in if you think it's different. If you think the economy is booming. Car prices are dropping, which is a good thing. But I think we need a healthy pullback, and usually we revert to means. And I think we're a little overextended here. And not only that, we have, I know we're halfway through the year, but we do have, next year we do have elections, which should be crazy. I'm gonna have to put my earphones on for that, and listen to a lot of George Carlin. So that should cause some more volatility. We need volatility. A VIX at 13 is very complacent for what's going on in the world, in my opinion, with inflation, with a war. China can go into Taiwan any minute. I mean, there's just a lot of variables out there, which is it's always the case. But the VIX, you have to respect the VIX, and the VIX is at 13, and you just can't follow the herd. Um, you just can't. Everybody's piling into tech, and they are overbought, overvalued, and you gotta stay with the fundamentals. That's just my opinion. It hasn't been working for me, um, and I've been rolling for more credits, and the market goes up like this, and then goes wham, and it gets hit and it goes down big. Um, when it goes down like in an elevator. And I think it'll be good. You can add in positions that you like, etc. Anyways, take care, and I'll see you next video. Bye.